in the last 2 or 3 weeks, over $700 million have flown into XRP ETFs, which is just it's pent-up demand from institutional investors, from investors who want access because they don't want to custody themselves, what have you. But look, again, if you zoom out to the macro level, the total ETF market, only 1 or 2% of the total ETF market is crypto. I will bet anybody here that a year from now, that will be more than 1 or 2%.
Brad Garlinghouse is predicting an XRP ETF explosion, pointing out that there's already been $700 million in inflows in just a short few weeks. But what else he says in this interview, you need to take a listen to in the next few moments here. Crypto prediction platform Polymarket officially begins rolling out its app into the US again after once being removed. What crypto needs more than anything is liquidity, and what Grok has to say about the potential impact Polymarkets could have on the crypto markets, first pointing out boosted liquidity and trading volumes, a direct effect. US users represent one of the world's largest crypto demographics, with over 50 million Americans holding digital assets. Enhanced market efficiency and information flow, a direct effect, also increased adoption and institutional entry. This could be one of the bullish catalysts that ignites the next crypto market bull run. Jim Cramer's mind has been blown so much that he's talking bullish on Michael Saylor's strategy 2 days in a row here. Inverse Cramer effect has not kicked in, and he points out that this is because of a whamma jamma against the shorts with a pincer movement, calling Saylor a man who knows his stuff and a genius for having the cash reserve to pull this off. What's even more exciting than the bullish news on this is the MicroStrategy chart, which we will jump into a little bit later on here. Altcoin Pro University pointing out that Bitcoin's back to $92,000 and Bitcoin dominance looks to go to about 60%. If you missed the Black Friday special through Cyber Monday, for your opportunity to get into Altcoin Pro University for free for 7 days, you guys can still take advantage of the 14-day money-back guarantee, giving you that opportunity to get into this community, not just getting market updates, but also crypto news, altcoin picks, DeFi yield picks, where we've talked about this before in videos: 50% APY, 12 to 20% APY, 100% APY, 39% APY, and so many more. The link is down below. If you're going to go ahead and click that, don't click off of this video just yet, because we've got a lot more to cover. The bull market peak indicators at CoinGlass flashing an increase of almost 3% overnight, showing that indicators are moving more towards completion. Bitcoin dominance is increasing, and there's a potential for a bull market run. Guys, we've got so much more breaking epic crypto news around XRP, Bitcoin, and strategy, and the overall crypto market as a whole. You don't want to miss this video if you hold any Bitcoin, XRP, or other cryptocurrencies. But before we jump into it, you guys know what to do. Give me a comment, 777 down below, if you're feeling bullish, you're feeling blessed, and you're ready to be that first millionaire in your family. Smash that like button, hit subscribe to affirm it, and let's run into the video.
ETF floor was overhyped?
Definitely no. I mean, look, obviously what you were describing is all data correct, but I think you got to zoom out a little bit further and realize that this ETFs didn't exist because of the regulatory problems in the United States. They didn't exist, and in the last 2 or 3 weeks, over $700 million have flown into XRP ETFs, which is just it's pent-up demand from institutional investors, from investors who want access because they don't want to custody themselves, what have you. But look, again, if you zoom out to the macro level, the total ETF market, only 1 or 2% of the total ETF market is crypto. I will bet anybody here that a year from now, that will be more than 1 or 2%. There's going to continue to be inflows, and yes, you can take a snapshot of time and say, okay, there's a billion left Bitcoin ETFs or whatever the data you cited a moment ago. But if you zoom out a little bit further and say, okay, over 2026, do we really think crypto ETFs are only going to be 1 or 2% of the total ETF market? No chance. And so that, again, it's one of those macro tailwinds where Ripple sits in a position where we see, particularly from our Ripple Prime, the prime brokerage business, we see a lot of interesting activity where institutions that have been on the sidelines, maybe because of regulatory clarity, maybe because of risk aversion, for whatever reasons they've been on the sidelines, they're getting And they're starting small, and they're going to walk, then they're going to crawl, then they're going to walk, then they're going to run. And I think it's going to create a lot of tailwind.
Brad Garlinghouse has never sounded more bullish on XRP and crypto ETFs as a whole. Yesterday, we saw Vanguard and Bank of America pouncing all over crypto with offering it to their clients. And today, $1.5 trillion Merrill Lynch joins the party. This is absorption. Wall Street has just executed the most coordinated financial maneuver since 2008. According to Shanaka and Salam Pereira on X, a fantastic analyst if you ever get a chance to read their stuff. But in 216 short hours, they captured Bitcoin between November 24th and December 2nd, 2025. JP Morgan filed leveraged Bitcoin notes offering 150% upside with a 30% downside protection. Vanguard reversed years of oppositions, as we saw yesterday. Bank of America following suit with 15,000 advisors beginning to recommend Bitcoin and allocations of up to 4%. Goldman Sachs acquired Innovator Capital for $2 billion the same day. 4 institutions, 9 days. Combined assets exceeding $20 trillion. Well, Trump said $20 trillion was about to flow into the markets, and this might just be that wave that we have been looking for. This is no longer a coincidence. This is absolutely coordination. But one fact remains. Retail is still left in the dust when it comes to cryptocurrency, when it comes to stocks. We are seeing American jobs fall away faster than they did in the post-2008 collapse. U.S. ADT private payrolls unexpectedly fell by 32,000 jobs in the month of November, while a gain of 10,000 was expected. The Fed will have no choice but to cut rates again. This is bullish for these asset classes. And Trump talking about massive stimulus checks and the biggest tax cuts ever might just be enough to bring the American retail back into crypto. If you think you're late to the game on this, I want you to listen to what Raoul Pal has to say here. We've talked about this elongated banana curve, and he is coming out guns blazing with the data to support that we are still early.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other real other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet, but this one is a 5-year cycle. And this is what it looks like. A 5.4-year sine curve. 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
Thanks, Raul. We appreciate that. And on that note, we're going to jump into the charts. Again, guys, none of this is financial advice, all simply informational, educational, and some entertainment purposes only. So don't run out and buy XRP and Bitcoin and strategy simply because I'm talking about them here. But let's look at this. The Fear and Greed Index is finally ticking back up a little bit. Still in fear category at a 22, up from the 16 it was at yesterday. $3.14 trillion in the total crypto market cap. Altcoin season index still hovering in that low fear category, extreme fear, at a 21, but the market cap is ticking up at $1.3 trillion for altcoins. That's an indicator that money is rotating. We'd like to see a bigger jump in that. We'd like to see more retail involvement. We're going to jump into the chart specifically, but the first one I want to talk about is strategy, MicroStrategy. Everybody's wondering, with the news pumping, MicroStrategy announcing a $1.44 billion reserve fund to be able to squash any shorts pulled against it. Is this another FOMO event? Buy the news, sell the rumors, and it's going to start dumping on everybody who's climbing back into it. You can see on the charts here that there has been a clear and decisive bounce here. What I'm more excited about, and again, not financial advice, but the bounce took place right on the 1100 EMA ribbon. Guys, I'm going to hammer this one home. I love the 1100 EMA ribbon. It is a very widely used institutional tool. And if you're looking at it on a daily chart and you see that it's bounced off of it, we've held support right there. Obviously, the Wolfpack confirming that it's still bullish. You can use this every time there's a trend that starts to move. If it starts to go down, well, say from where we're currently at, we could start to jump into the 12-hour or the 4-hour chart. We would see that we're already below it. In this case, we've got to climb back up above it on the 4-hour chart to confirm, get back above this 50 here, and that would confirm that we do have a bullish trend, an uptrend taking place in strategy. It looks like it on the daily that we're there. I'm more of a macro guy, so in the short term for day trading opportunities, I'm not even going to jump into these 1-hour charts, but clearly at this point, we've got bullish momentum on strategy. Jumping into Bitcoin, the North Star of the market. Obviously, at this point, it seems to be completely decoupled from any altcoins, meme coins, dust coins, game coins, NFTs, whatever else. That's obviously all retail driven. But on Bitcoin, the big talk has been, should we break to the downside? How much lower do we have to go? I'm not going to say that we're going to go to the downside. I'm going to say that if we do, however, I'm looking at the 1100 EMA ribbon right down there, $72,000 to $74,000. Currently, what we're looking at is bullish momentum moving to the upside. Are we out of the woods yet? No, we're not. You can see that that 50 EMA puts us right there at that $98,000 to $99,000 resistance that we're going to have to cross above. Once we can get above that, we can start chopping through other layers of resistance and forming new levels of support as we move to the upside. Historically, though, we do know that once Bitcoin starts to move and it's absolutely off to the races, things move very quickly. So if we get back above 99,000, there's nothing to say that we couldn't go back above 106, 107 very, very quickly after that. That would indicate that we are in somewhat of this elongated 5-year cycle, super cycle type scenario, which could carry us right into Q1 or Q2 of 2026. If you guys remember from a video I did a while back, there's a lot of news, the Farmer's Almanac, a lot of predictors that are out there saying 2026 for the peak for real estate, the peak for the stock market, the peak for crypto, right, as a whole. And we look at Q1 to Q2 to be that peak, because otherwise, if we don't sell in July, we will cry. And that seems to be repetitive. It's not something that people are guessing on and throwing a dart at a magical dartboard. It's just repetitive. Like, it's the psychology of a market cycle over and over again. And the institutions know this better than any of us could ever know this. Jumping back into the rest of crypto, though, we look at Ethereum, we look at the others categories, and these are all other cryptocurrencies against Bitcoin, excluding the top 10. We look at these as our retail indicators, and right now we are still a long way away from breaking this downward trending resistance on all the others. So in the short term, we'll start to look at Ethereum. We had a nice bounce off of the 1100 EMA. We ran up a little bit, met some resistance at 3000, came back down, bounced off of it again, confirming that it is support right around $2,700. Solana in the same boat. Solana has broken down below its 1100 EMA, came back up above, met resistance around $140, came back down, bounced at the same place, and has run back up. So it's currently in resistance. I'm looking for us to get inside of this channel here, which is about $141 to $152. If we can start chopping in there before any other catalyst comes in, I would be looking at that as a fairly good indicator that some retail resurgence is starting to come back. Sol took a lot more of that retail liquidity in the last 3 years than Ethereum did. ETH's still too high of gas fees. That's why you see Binance pumped over $1,100 or $1,200 a token, right, a coin, earlier this year. The gas fees is where it's at, and everybody knows XRP is phenomenally cheap, which is why institutions use it to package up one currency and off-ramp it somewhere else into another currency. But XRP, again, running up and meeting some resistance around that $2.20 mark. Yesterday, pulling back just a little bit from there. It's about $2.17 at the time of this recording. I expect XRP to chop sideways just like I do Bitcoin until something sparks this market. The question on everybody's mind is, what is it going to be that's going to spark the flame? When is it going to be that this happens? Are we going to see a pump through the rest of 2025 by Christmas, by New Year's, or are we going to just be chopping until we get into Q1 and Q2 of 2026? A bigger question I have for you is, we've talked about Altcoin Pro University and being able to get your education on all of the different classes that are available. Crypto Tax Mastery, Technical Analysis Essentials seems to be the most popular right now, with people looking to diversify their portfolios into day trading. And if you haven't learned how to do that yet, my question would be, why not? What's stopping you from taking that chance? And if it's money and you have the ability to use a prop firm funded account by simply passing a test for, say, anywhere from $50 to $1,000 and getting a funded account from anywhere from $5,000 to $100,000 to use to continue your trading. If you have $10,000 in crypto right now, you could take 10% of that and take a test for $1,000 and get yourself access to $100,000 in trading. To me, it sounds very risk off. Everybody's got to weigh their appetite. But if this sounds enticing to you, we've got one more question for you.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent. That's your groceries. That's an emergency fund. And one bad trade or black swan event, and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000, because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click Start Trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
Guys, remember that code 777. Let's see where XRP and where Bitcoin and the rest of crypto is going to go. And I will see you in the next video. Thanks for watching.